Here's a question for you. Should you buy a car through your limited company? On paper, it sounds great. Company car, tax relief, maybe even a slick electric vehicle with your logo on the side. But there are a few factors that you need to think about before going all in. When your limited company buys a car, the company owns it, not you. That means any payments, whether you're buying it outright or leasing, come out of your business account. Same goes for insurance, maintenance, the works. Everything gets paid by the company, which sounds pretty good, right? And the wins don't end there. If the car's mostly used for business, your company could claim capital allowances. And if it's a low or zero emissions car, you could even be able to deduct the whole cost of it in the first year. But what about VAT? Yes, you might be able to claim that back too, but only if it's 100% business use. If there's any personal use involved, and let's be honest, there sometimes can be, and probably is, VAT becomes trickier. Maybe 50% on lease payments, but not all on full purchase. So this is all well and good, but what are the downsides to this? Let's talk about what could really come back to bite you. Here's the bit that can trip people up. Benefit in kind tax. If you use the car for personal use, even commuting, HMRC sees that as a perk. And that perk gets taxed. The more expensive or higher emission the car, the higher the tax. In some cases, that tax bill wipes out any of the savings you thought you were making. Insurance is the next factor, because it's often more expensive for company-owned vehicles. And don't forget, buying a car ties up business cash. That might be fine for an established business with a steady revenue, but if your margins are tight, that could seriously sting. And then there's depreciation. Cars lose value fast. So if your company owns the car, it's taking that hit. The admin side isn't exactly light either. You'll need to keep proper mileage logs, which could be an app. We've got one, for example. Separate business and personal journeys and make sure everything is squeaky clean for HMRC. Now, if all that sounds like a headache, there are alternatives. You could just buy the car personally and claim mileage for business trips. That way you avoid benefit in kind tax altogether. HMRC lets you claim 45p a mile for the first 10,000 miles, then 25p a mile after that. Simple, clean, less hassle. Alternatively, you could lease the car privately and charge the company for the mileage. Or if you're paying staff, offer car allowance and let them handle their own vehicles. So after weighing up the pros and cons, is it worth buying a car through your company? If the car is genuinely for business use, and especially if it's electric, putting it through your company can be a great money-saving option. But if there's a lot of personal use, or if you're looking for something flashy, you could end up paying more tax and doing more admin than it's worth. It's a good idea that before you commit, you lay out how you plan to use the car, get the numbers in front of you, and make the call that makes the most sense for your setup. And if you want, chat to your accountant. This stuff is not one size fits all. But once you understand the trade-offs, you can really make a smart decision for your business. So if this video has been useful, it's well worth checking out the video, especially on the new vehicle taxes. So see the video we did called Shocking Car Tax Changes from April 2025.
Turn up. Let's go.